Welcome to Market Peeker. In today's episode, we're going to dive deeper into three essential terms every Forex trader should know: bid, ask, and spread. These terms are key to understanding how trading works and how you can make a profit or a loss in the Forex market. Let's break them down one by one. First up, the bid price. The bid is the price at which the market, or your broker, is willing to buy a currency pair from you. In other words, if you're selling, the bid is the price you'll get for your currency. For example, if you're trading EUR USD and the bid price is 1.2000, that's the price at which you can sell €1. Next is the ask price. The ask is the price at which the market or your broker is willing to sell a currency pair to you. If you're buying, the ask is the price you'll pay. So, continuing our example, if the ask price for EUR USD is 1.2005, that's the price you'll pay to buy €1. Now, what's the spread? The spread is simply the difference between the bid and the ask prices. It represents the cost of the trade and is essentially how brokers make their money. In our example, if the bid price is 1.2000 and the ask price is 1.2005, the spread is 5 pips. The smaller the spread, the less you'll pay to enter or exit a trade, and the better it is for you as a trader. Spreads can vary depending on market conditions. In times of high volatility or low liquidity, spreads can widen, meaning the cost of trading goes up. On the other hand, during normal market conditions, spreads are typically narrower, which means lower costs for traders. Understanding the impact of the spread is crucial, as it can influence your overall profitability, especially for short-term traders who make frequent trades. Here's an important point. Because you always buy at the ask price and sell at the bid price, your trade needs to move in your favor by at least the size of the spread before you start making a profit. For example, if the spread is 5 pips, the market needs to move by 5 pips in the direction of your trade before you break even. So, always consider the spread when planning your trades. That's a quick overview of bid, ask, and spread. These concepts are fundamental to every trade you make in the Forex market, and having a good grasp of them can help you better manage your costs and make more informed trading decisions.